our view as it relates to China is that things are likely to get worse before they get better. Our base case is that you will see the president move forward with that 10% of tariffs on September 1st. And then it's really a question of, do things then just simmer at that point or do they escalate? And I think at this point you can't necessarily rule out escalation.
Yeah. So, Ron, if that in fact happens, what is the market going to look like?
I don't know. And it's funny, in the pre-interview that I shared with your producer before this, I just said the world's lousy and the stock markets don't seem to care all that much. The bond markets do, as Libby and I talked beforehand.
Because the U.S. is not lousy.
Well, the U.S. is not lousy, but I mean, so the U.K. just had a contraction in growth, and they're going to crash out of the EU on October 31st. Hong Kong is having both a political and economic crisis. Venezuela, we have an embargo and a blockade around. We have North Korea, which someone just said in the prior show, is low on the list of worries, and yet there are provocations. Then there's China. Then there's Italy, with the government there falling apart. I mean, there's a lot of stuff going on. That
I see your risks, and I'll raise you, Libby. A Fed put, a Trump put, all that stuff people talk about.
Yeah, and look, I mean, I think the Fed has certainly indicated, especially around trade policy, that they will be accommodative of any sort of market dislocation that's based on trade policy uncertainty. Just a question of, whether the Fed sort of can keep up with what President Trump is doing. And I don't think people should expect that the president at this point is going to reverse on China. Look, this is, the president believes that tariffs work. He believes that tariffs brought China to the negotiating table. He believes that tariffs got a better USMCA, a NAFTA 2.0 deal.
Which has yet to pass.
Which has yet to be ratified. I don't think Speaker Pelosi actually has any incentive to bring that up, but that's an aside.
I'll let the facts get in the way of it.
But I think that the point here is that I think there's been sort of this narrative that, President Trump just puts out a lot of threats and doesn't follow through. If you actually look at China, he has followed through with them. And so I think we should expect him to continue to ratchet up pressure on China.
And Libby, do you think that a fight is just as good as a deal for President Trump, or is a deal very necessary?
Yeah, I think that's another thing that I think in the market and what we're hearing from clients is sort of this expectation. Well, of course he needs a deal going into 2020, and I'm actually not sure that is the case. If you look politically, even among the farmers, he still has a lot of support, especially on China. Now, he may not have support for NAFTA withdrawal or for auto tariffs, which are the other sources of trade policy uncertainty. But China is sort of a different beast here. Democrats support him in rectifying this relationship with China. Defense hawks, support him. So I think that there is a lot of political runway that he has in order to go hard on China. And in some ways, no deal could be better than a weak deal.
Although I would say that runway stops at a recession. So if you get a global recession that takes the U.S. with it, that certainly historically has never been good for an incumbent president. And on top of that, you could start to see some disruptions that are not yet priced in, competitive currency devaluations that get worse than what we've seen thus far. And that creates real dislocations in financial markets around the world. So I think those are the things you have to look at before you can say one way or another whether it's good or bad for the president.